All right. Today's SPY was up 0.15%. And even though it was a very flat day, we still did learn something today. And it goes hand in hand with what I talked about last night is there's a very good chance we are going to enter what is called a bear trap, which essentially means that the majority of traders think we are going lower. So they're either going to sell and get out of their long positions or even try to short. And then the market is going to do the opposite of what is expected and we're going to go higher. And the reason I still think it's a bear trap is because today's price action confirmed that we still have buyers in this zone. You could see from the daily candle that we closed near the highs, even though we tried to break down. And as I told you last night, we need to break 584. So it's very low risk to be in the long trade. And you always want to be in the lowest risk with the highest reward trade, which is currently still the long trade. So all you need to do to not mess up this trade is to simply stay long while SPY is above 584. But I do want to warn you, I never assume the market has to go higher, which means you need to move like water if the market starts to break down below 584. That is your confirmation from price that we are not getting the bull scenario, and that means you need to manage risk to the downside, which could easily take us down into the 570s. Never assume or never hope or never trade on the fact that the market can only go in one direction. Our job as traders is to be profitable whether the market's going higher or lower. And the best way to ensure you do that is by managing risk and getting in the best trade setups with the highest probability chance. And over time, you will win more trades than you lose. And even if you don't, let's just say you're winning 50-50. If you have the right risk reward setups and you're getting more reward than the money you're risking, you will still be profitable at even a 50% win rate. So focus on learning how to be a disciplined and profitable trader. It doesn't mean you need to predict the future. It means you need to look at the chart and understand how to read the chart and understand the best trade from the chart. And the best trade from this chart is still the bull trade for that push higher into a brand new all-time high territory. That risk level is very clear right there at 584. It does not get any simpler than that. I'm not sitting here promising you it's going to win and you're going to profit, but I am telling you based on my analysis and based on my experience, this is the best trade setup, which means you want to continue to stay long, even if it takes time and patience. That's why swing traders make the most money, because time is on their side and they have the flexibility to be patient because they don't need to constantly make a trade or move every single day like a day trader. Don't get me wrong, I love day trading and I love day trading volatility. Today was a great day to be a day trader, but the majority of the money you make will simply just be getting in those best trade setups and then letting time pass as those trade setups work. So for that reason, have a realistic expectation. This arrow could take all the way out into the end of the month before we see that price target, but you have to enter the trade today because that is where the entry is, and then you need to have that patience. So SPY above 584, it is as simple as staying bullish. It is a bull trend until it's not. If we get the bear breakdown and confirm a bear trend, we are going to see the confirmation of all of these lower highs and the breakdown below 584. Then we can start saying it is a bear trend, but it is still a bull trend until it is not. On the NASDAQ 100 triple Qs, we had an extremely exciting day of going absolutely nowhere with a positive 0.02% day. And just like I told you on SPY, nothing has changed from the analysis and the trade that I gave you last night. I still think there's a very good chance this is all a bear trap, which means anybody shorting down here is shorting right at support where they should be buying long positions. And that means they're going to likely get bear trapped and squeezed out as we push higher into the 530s and 540s off of the support between 514 and 510. Just like I said with SPY, we don't just assume the market has to go lower, so we always have our contingency plan confirmed by price in the chart. And that will be the confirmation of the break and confirming we have lower highs and lower lows on the breakdown below 510. Below 510, we could easily flush all the way down into the 490s. So it's very important to manage risk if we get the confirmed breakdown. And I will remind you, if we get the confirmed breakdown, it's a lot better to just manage risk instantly, because even if it's a false breakout and we then continue to go higher, you're going to see it in price when we get back above 510 and break the resistance downtrend. And even though you'll be buying at a higher price up here right around 517, for example, you now have a higher probability chance to know we're going higher and you don't have to guess. So if you do not like buying down here because you think we're going to break down, that is fine, but that means you will be buying at higher prices when the risk is higher. Right now is where you're going to get that low risk entry with the very obvious confirmation that it's breaking down below 510. So hopefully that makes sense. I'm trying to teach you how to get in the best risk reward setups with the best probability so that you can learn how to do this yourself. But as always, I have my services available. The Stock Channel Discord, you'll get all of my analysis with trade ideas on various tickers. And then if you really want me to hold your hand through this, I have the Stock Channel Trade Alerts. alerts where you get the exact percent allocations that I'm going to be in for the TQQQ or SQQQ. And you get those alerts every time I suggest making a trade or making an allocation adjustment. So all of those services I'll put in the description below as well as the comment section. And I assure you, you will absolutely crush this market in 2025 if you learn how to manage risk and become a very disciplined trader. And also, as a very quick reminder, tomorrow the market is closed because the stock market will be honoring the death of Jimmy Carter. So I will see you all again on Friday as we go into the last trading day of the week. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.